Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. And if you're interested in my sports card channel, follow me at AIH Sports. Okay, so I haven't done a video in a while and I wanted to touch base on a few things that I've noticed. The markets have tanked in June, or they tanked until June and then they rebounded. S&P was close to 3600 and then it went back up. What is the S&P right now? Close to 4200. So a few aspects, speculators were pricing in a recession. I don't think it's going to be as bad as a 2008 recession, and who knows, we may actually have growth in Q3. And as long as inflation isn't excuse me, as long as it isn't crazy as it was a couple of months ago, those numbers that came in, expect slight growth. And if that continues, you have slight growth, that should bode well for the markets. And a big announcement is going to come, probably not a big announcement, but the Federal Reserve is probably going to raise interest rates maybe 50 basis points. Right now, the Fed funds rate is what, close to 2.25 to 2.5%, somewhere around there. And the 10-year yield is about 3%. So that still is an upward sloping yield curve. So when you have an upward sloping yield curve, it's good for the banking system, right? The banks could borrow at this interest rate and lend at a longer interest rate. And as long as that's positive, that is bullish for the economy. Once it goes inverted, then you could potentially have problems in the economy. That doesn't mean that the sky is going to fall and the markets are going to tank. You have to remember 2006, 2007, the interest rates were inverted and you still had stocks going higher. So just remember that. And how did the markets go up? I believe the deficit spending, even though I'm not a fan of it, that pumped up the market. They kept on they kept on spending more, I believe, and going more into deficits. That's how they got around it. More deficit spending in the short run, it pumps up the markets, right? And that brings me to right now. So what was going on, right? Why did the market take a huge hit and why is it resuming? So I like to listen to people with different opinions. If you guys don't know, I follow the Austrian Business School. I don't like big government, but just because I don't like big government doesn't mean I'm going to stop listening to others that don't agree with me. For instance, I listen to a guy, Mike Norman. Now, I don't agree with this philosophy, but he's a trader, so I listen to him with open ears. I used to be like, oh, this guy's a crackpot right now. And as I've got older, I'm like, hey, let me listen to people with experience. Doesn't matter if I agree with their philosophy. And his basis as an MMT guy, he believes that government spending basically helps the economy and it pumps up the markets. And his thesis is as long as you have more deficits that year over year, increase percentage over percentage, then that will pump up the market. That's what my understanding is. And he noticed that there was a slowdown in government spending during that time frame where we had the market go down. And also you had rising interest rates as well, aggressive interest rate hikes. So I, once again, am not in favor of deficit spending, but in the short run, it pumps up the market. Just like the deficit spending pumped up the collectibles market in 2020, which I was a part of. Once again, I talk about sports cards and I talk about these topics as well. The same thing goes, in my opinion, with the stock market. And he says that, hey, when companies or when the government spend less and they're getting more taxes, that actually could stop the markets from going higher. That's what he's saying, okay? And he says, okay, when he's look at this data, it's quite interesting. So whenever there's a corporate tax hike, government gets more money, but at the same time, the government's giving less money to individuals out there. So they're not putting their portfolio accounts. That's what he says, right? Some people may say that's a crackpot idea. Once again, I'm listening to people with all types of opinions. So what I'm saying is next month ahead, there's a corporate tax payment. And after that corporate tax payment, then the government will continue to pump money into the system. And so I expect volatility in September. But then the resumption of the bull market should happen. Now there is an election coming in November. So that's something in mind. There will be volatility, but I believe that this volatility will be a time to actually still be buying, right? This is not a recommendation to buy or sell. This is just what I'm thinking. So we have a couple of things. Government's still pumping money into the system, so that helps equities, at least in the short run. And even though like I've stated before, I am bearish 2024, 2025. I've given that outline. And if you look at the dollar index is extremely high. It's like 108, 109, whatever it is. And you still have the stock market, it hasn't collapsed. So I'm thinking, okay, the Federal Reserve says we're not going to raise interest rates anymore after September. They're taking a pause. Yield curve is still positive. So then maybe Europe raises interest rates more, the ECB. Dollar index could potentially go lower, right? Interest rate differentials. And the dollar index goes down. What will that do to corporate profits? In my opinion, that will help these international companies, and because they like a weaker dollar in terms of exporting. So when you have that, it helps corporate earnings, helps GDP. And even though I'm not a fan of a weaker dollar, but I'm just looking at it from a price action perspective. So a weaker dollar could help corporate profits pump up the markets even more. And that's why I've stated, even as the market was going down, taking a hit, I had videos earlier saying I'm bullish. This is why I'm still bullish, because now through the FX market, the dollar could go lower. It could help corporate profits. Now, it may not be good for inflation. You're still going to have it. But at the same time, I'm just looking at price action. I have to take away my own biases when examining price action. This is the mistake that I made many times when I used to do videos back in the day. So all I'm saying is, you do you, right? Do your research, talk to your broker, and do whatever you want. This is just my own thoughts. That, okay, volatility probably, in my opinion, September. You also have the Jewish holidays. And I read this one economist who passed away last year, Robert Wenzel. He used to always talk about when he used to work on Wall Street, during the Jewish holidays, it was Rosh Hashanah and Yom Kippur. During that time frame, you had volatility. I'm just wondering, thinking out loud, is part of that volatility due to also the corporate tax payment that's made, right? The government can't dish out that money, and it can't pump up the market during that time. I'm just thinking out loud. Doesn't mean that happens every time. Just, thinking out loud regarding that. But anyways, guys, let me know what you think. I believe that the weaker dollar, even though I did a video saying, hey, a couple of months ago that the dollar weakened, it hasn't weakened yet. But the minute it does, that should help equities even more. And also markets that I follow, precious metals, right? Precious metals haven't tanked as the dollar has gone up. So that's what I'm looking at. I have been looking at some of these big cap stocks, some of these stocks that I have. But let me know what you think. Remember to smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.